Hello, people. This is Lee Gettess with the Market Sense for the week of July 28th, 2015. We are going to look at some charts that come from the Trade Navigator software. And we're looking at a weekly bond market chart here. And as I've said previously, with this big V at the top here that they broke down through, you would have expected there to be some pretty substantial follow through, especially with the Fed continuing to threaten to raise interest rates. That follow through has been minor. I'm going to say minor, but at least calm. It didn't go as straight down as we would have thought. And they've got kind of a rounding bottom here, and they look like they're trying to move back higher. This week has actually not accomplished much of anything at all. We've got the support, if they're going to continue the trend up, in the 154 area. Let's call it 154.02. They have not been down to that. And while they have gone higher, the target we have, the projected high up here, is 156.08, and they haven't been to that either. So what do you think? You think they're waiting for the Fed on Wednesday? That's a distinct possibility. No press conference after the Fed meeting adjourns, just a statement. So highly unlikely that they'll do anything with interest rates, but everybody wants to hear what they say anyway. I think they could break down to the middle moving average here at 151.28 and still look reasonably good in the big picture, but I really don't know what they're going to do. They haven't done anything yet, and I think the Fed is probably the big focus for them for the week. Now, in stocks, we have kind of a different focus. The first 2 days of this week have been big down, followed by an even bigger up, and both of those are in reaction to what's happened in the Chinese market. And what happens in the Chinese market is largely dependent on how much the Chinese government wants to come in and support it. The big picture, though, if you look at the last 4 months, 6 months, really the whole year, they still haven't done anything. We're still in this big, long sideways pattern. Volatility has picked up a little here recently. But, the breakdown here, the support was 57 or 2057 to 5702 or 2002. I'm sorry, let's try that again. 2057 to 2052. Yeah, they got there. I mean, they touched it. So I guess you could say they traded support. Resistance is up around 2108. Haven't come anywhere near that yet. So as impressive as Tuesday's rally was, and this rally is basically all Tuesday, they still haven't done anything. They're still right in the middle of everything that they've been in for the last several months. And will it take the Fed doing something with interest rates? Will it take the Chinese government running out of money to support their market? I don't have any idea what it'll take, but something is going to break this puppy out of this long-term sideways pattern. And when they go, the move ought to be really substantial. Only problem, as I keep saying, is the first move out. Quite often that's false. So that's what we're looking at today. I hope you can find something profitable to get yourself involved in. Thanks for checking in to see what we think.